Hey guys, welcome. Welcome in. Investing Masterclass 2025. Welcome, guys. Let's go. Who's pumped up? Who's ready to go? Who's ready to start taking down apartments? I'm going to promote Larry Kite here. All right, we got a big day. Let's see who's joining us. Where you from? What's going on? What you got? What's going on, guys? Make some room in the back. Got a lot of people coming in. All right, good to see you guys. Let's go.
Good day to talk about buying apartments.
Great day.
Can you give me chat access? For some reason, I don't, when you promote me to panelist, I don't have chat access. I don't know why.
Yeah, I'll do that now. All right, we got Lisa in Silver Spring, Maryland. Hey. All right, Michelle in Washington. Another Michelle in California. Let's go. Good to see you guys. See if I can make Larry co-host. There we go.
Newnan, Georgia, in our backyard or front yard, one of the two.
All right. Yeah, not too far. We're in Columbus, Georgia. So let's get rolling. We got people all over the nation, though, so I'm excited to talk to you guys about the different areas as well and how to approach buying apartments in today's market. So I'm going to go ahead and share my screen and get started if that's okay with you guys. It's good to see all you coming in from all over. Got a lot to talk about. All right. So let's dive in. What if you could become financially free with just one real estate deal in the next 6 months? That may sound wild, but let's just say, what if? That's our whole point to talk to you today. There's an opportunity in today's market that I think is incredible, and we're going to show you some real case studies today that I think will give you a good understanding of how you should be approaching these deals. But I will add, investing only 5 to 10 hours per week and leveraging capital partners to fund the deal. I am really excited to be talking to you guys about this. Larry and I are pumped for this. We've got our team on here, and we're going to be talking more about our capital group in a little bit and kind of how we're approaching these deals. But I wanted to put this presentation together for you guys to help you out in your journey. All right. So I'd love to hear in the chat, put in the chat what your current experience is in terms of real estate. Do you have any background in real estate at all? Or are you just getting started? Are you currently investing in single family? What does that look like? Do you already have properties? How many properties do you have? What does that look like? Drop in the chat. Love to know, who are we talking to today? Okay, non-beginner, perfect. All right, yeah, you're in the right place. Go ahead and keep dropping. Okay, had one single family many years ago. Cool. Beginner. Awesome. Well, look, investor, currently an investor, realtor. Okay, perfect. All right. Well, look, you guys are in the right place. Just would love to get a grid of who all is on the call. Okay, I got 2 or 3 single families, I'm assuming. That's great. Wholesaler, perfect. All right. Well, look, we're gonna take you from where you're at to catapult you guys. You got a long ways to go, and we're going to shorten it in just a little bit of time here. Okay. So let me hear one more thing. How many of you believe in today's market, with interest rates, with everything going on, how many of you believe there's more opportunity, and how many of you believe there's less opportunity when it comes to multifamily? Drop in the chat. What do you believe is happening with the current situation in the market? Is there more or less? All right. You got some people saying more, some people saying less. All right. Cool. Let's go. Okay. All right, let's ask one more. How many of you believe there's more capital availability? How many of you believe more people are wanting to invest in deals in today's market, or there's less people? Which one do you believe? More. Okay. All right. More capital. you guys have a great mindset. If you're thinking less, we're going to talk about that. So we're going to dive into the actual metrics and stats. So let's get this thing rolling. I appreciate you guys sharing that. Our goal today is to provide the easiest way to buy 10 to 100 unit off-market apartments using other people's money and make more passively than you do in your full-time job. All right, so in our short amount of time today, guys, we are going to condense what takes most people months to learn in just an hour. All right, maybe an hour and a half. All right, and we're going to walk you through actual case studies, actual deals that we've transacted, that are transacting in today's market. So this is not theory. This is real deals in today's market from real people that were just like you. All right, but including our capital group as well. So and we're going to be jumping in how to find deals, how to fund, and how to get them to the closing table. One big housekeeping thing, put your questions in the Q&A portion. Don't put it in the chat. If you have questions, put it in the Q&A, because the chat will get buried and we will miss it. At the end of this call, we're going to answer a bunch of questions. We'll just go through the Q&A and just knock out all your questions. So we want to make sure everybody is leaving here with absolute clarity on how to get into multifamily, how to buy 10 to 100 unit multifamily right now. All right, the big, beautiful bill just passed. I got 100% bonus depreciation. There's going to be a lot of money made through that one thing right there. If you can understand that concept, what we're walking you through, these deals can change everything for you. Okay, so make sure to put your questions in the Q&A. All right, so the problem, what is the current problem in the market today? Okay, most investors want to create passive income, but they are stuck in a time-consuming, money-draining roller coaster because they are thinking too small. How many of you resonate with this statement right here, right? If you're trying to get passive income, you're trying to do all the things, but it's just sucking your time. This was me, all right? I see people in there. Yeah, you understand what I'm talking about. This was me, and it's not fun, right? It's emotional. It's a crazy roller coaster. But here's the other thing. A lot of investors have the right vehicle. Maybe you understand multifamily, you understand that you've got to get into a bigger vehicle and the right vehicle, but you're getting slowed down because you need more money, more deals, and to build the right team. All right. One of those three things is capping you or making you feel stuck, right? And so that was also me. And I'm going to share more about my story and Larry's story in just a little bit, but you got to have the right people around you. And so we're going to talk about that in just a second. But here's the last things as far as challenges that you think are stopping you, right? These are challenges. My goal here today is to call out everything, every excuse, call out everything that's hindering you from getting to where you want to be, and make sure you understand how to bypass those things. But challenges you think are stopping you. You don't have any money, right? Now, I'm not saying everybody, some people are wanting to be a part of a deal as a limited partner, but a lot of people want to raise capital. Even if you have a lot of money, you want to leverage your money better and you want to raise capital, right? So it doesn't matter how much money you have. It matters, are you able to leverage it to the maximum so that you can scale faster? Or maybe you have no time. I know a lot of people who come into this slammed with their current situation, but that's exactly why you've got to be able to get into a vehicle like this to better leverage your time. You have nothing valuable to offer. Okay, you feel like maybe I don't have experience in this. What am I going to get? What am I going to be? How am I going to be able to participate in a game like this? Well, we're going to talk about that. Or maybe you're scared to get out of your comfort zone and fail, right? Maybe that's the other thing, right? So we're going to talk about all of those things. If that makes sense, if you have one of those that you feel like is a mental block for you, drop in the comments that I resonate with that. Let's see. All right. Let's see. Okay. So Roger, friend of mine, he said, I was on the track of buying one single family rental per year, but I realized it would be many years before seeing substantial income. All right. A lot of people are on that path of, I hear it so many times. I'm going to buy one single family rental per year and that'll equal retirement. Right? So we're going to talk about that and how that is just a long, risky play if you're really wanting to build a substantial retirement, right? Because all of those deals have to be good. Mr. Warren Buffett, the man I quote a lot, he says, it's not about how hard you row, it's about what boat you are in. I get an amen in the chat, right? It's not about how hard you row, it's about what boat you are in. All right. A lot of people are doing busy work. We get busy, we're working hard, but it's not amounting to what it could be amounting to if we just switched vehicles. So here's what we're going to walk you through. This is the solution to those problems, guys. This is what we're going to talk about and center this presentation on, is finding the right properties, buying large scale apartments. Okay. Like I said, 10 to 100 units. It's a sweet spot. Too big for the small guys, too small for the big guys, right? That's what we're focused on. We're going to talk about your buy box, talk about how to set your specific buy box for where you're at. And using syndications. Now, don't let the word syndication scare you or confuse you. It's just simply pooling money together to invest in an asset, right? It's pulling money from other people to be able to invest in a property. Okay, that's all it is. Next thing, off-market lead generation. Number 2, creating multiple streams of off-market deal flow so that we can be all in at 70-80%. That, don't let that scare you either. We'll talk about that in a little bit, but simply we need to be buying at a discount. So if you're not generating a lot of deals and you don't figure out how to create multiple streams of off-market deal flow, you're not going to have the best opportunities in the market that not only change your life, but also attract capital partners very quickly. Okay, so that is the number one thing right there, off-market lead gen. So we're going to talk about how to do that. And then key financing is the other thing. All right, so the last thing we're going to talk about is how to leverage other people's money, credit, and time. All right, so that's very, very important. So we need to know how to get the capital, how to get the financing, how to leverage partners to be able to make it possible for you to be able to go after larger properties. Okay, so whatever your qualifications, whether you're not qualified, whether you are, we've got it. Partnership is the key. All right, so these are the 3 keys to scaling your portfolio and doubling your current income in the next 6 to 12 months. Let's go through it. All right, so understanding the contrast between the single family deals is very important. What most people are doing, starting by investing in single family rentals or small deals, you got to take out a loan, renovate the home, hire a property manager, deal with turnovers, fixing repairs, refinancing the loan, all of this process. A lot of you may know this process. You know what I'm talking about. All for what? An extra 200, maybe 400 bucks per month in actual take home cash flow. Right? If you're really doing the math, maybe in some markets it's a little more, some markets it's less, but that is a typical return. And so in other words, if you do the math, you've got to do that 20 times to see any substantial income, right? 15 to 20 times and not experience any roadblocks. All right, like you can't have a bad deal, right? You gotta do it 15, 20 times, and it's got to be good to see substantial income. So we all understand it's just not exciting, right? What most people are doing as well, others are struggling, can't find good deals or can't fund the deals, can't get the money in the deal. And what happens? That you stay forever stuck in the speculation phase. You see all these people blowing up in real estate, doing extremely well in the market. And then all of a sudden you're just sitting there like, man, I can't get past this one stage of finding good deals or funding good deals. So we're here to crush that today. Let's go through. Larry's going to walk us through an actual deal that just transacted and how it played out.
Hey, yeah, this is a actual deal in Phoenix City, Alabama. That's an actual photo, not even a stock photo. So 88 unit standard garden style apartments. It is a LIHTC property, which stands for low income housing tax credit, and that's where the developer or the person that originally builds the project gets substantial tax credits in exchange for putting a deed restriction on the property that requires them to rent to only low income residents, and the rents are capped at a certain amount. So we were able to get this through a off-market broker listing. The original contract had fallen through. We got it for $4 million. That's just a little over 45,000 per unit. It was built in 2008, so just that alone sort of tells you it's a good deal, right? When they cost triple or quadruple that to build. We had $225,000 in improvements budgeted, and the 1.53 million equity created in 2 years uh, made a really good deal as well. But how that's done is when we purchased it, the developer or the owner was a nonprofit and they were just rocking along, not increasing the rents like they could. And we were able to increase rents about $160 a month over that 2 year period was the projection. Started doing that right away. Well, I always want to be more conservative with those projections, but that was the value add play here to put in better management, more efficient operations, and increase the rents $160 a month. And by that increase of net income, that's where that value jumps from 4.5 million to 6 million in 2 years. So in 5 years, $4 million equity created. Where that comes from is taking this property out of that LIHTC program and taking it to a market rate property is what that would be called, and increasing the rents even further. And that's where that number came from. So we put this deal together as a syndication with $0 out of our own pocket. We got a loan for $3.4 million and raised 1.2 million from limited partners or from the investors that brought the capital. And I think on the next slide, we'll kind of show you how that was structured. As I'm going to go over the right side first because that's where I left off with the passive investors that are limited partners. For that $1.2 million, they get what's called a preferred return of typically 7 to 10%. In this case, it was 8.5%. They get that from the time their capital is invested. And then they also got 24% ownership in the deal. So if you calculate that 8.5% on the 1.2 million, 204,000, and then the 24% of the 1.5 million equity that was created, 490,000. So that's comes out to a 22.7% internal rate of return, which is pretty good for most people.
Yeah, not
We're
too
just
bad.
writing a check and not doing any work. And they truly are passive. I mean, they write a check, they get, quarterly reports and read them if they want to. But the main thing they probably make sure is they get a deposit into their bank account, right? So our role, general partner. So in these syndication deals, if you're totally new, you got general partners, limited partners, general partners in charge of the deal, running the deal, make the decisions, sign the loan. We found the deal, we guaranteed the loan, we executed the value add plan, and take care of the ongoing asset management. For that, we got 76% ownership and zero out of pocket. And we're certainly not averse to putting in our own money and certainly have done that as limited partners in our own deals. But in this case, we just had a lot of people, more people that wanted to invest than could. So we uh,
Right.
obliged them,
Because it was
right?
a killer deal.
Yes.
Because you got a 22% IRR, guys, a 22% return. How many of you would want to do this deal right here? How many of you say, I'm down to do this deal? And if we can make it work, just drop in the chat. That's a deal for me. Come on, guys. $0 out of pocket. Because if you know how to bring these types of deals to the market, people want to be a part of these deals. People want to invest in these deals. All right, we're going to walk you through exactly how to do that. If you got questions, make sure to drop in Q&A. I know Larry just kind of covered a lot, so we're going to break that down, how that actually works and how to find these deals. But that is your number one thing, guys. There's methods that we're going to teach as far as capital raising, but you learn to create these opportunities in the market and find these deals, things change. So we're going to walk through a few more deals, but all right, I'm glad to see people are on board. They would do the deal. Let's go. All right. Yeah, we need to find some more like this. So we're going to talk about a few more. 1.53 million equity created, and really 12 months into it, there was somebody who made an offer that we didn't really entertain, but it would have put us 2 million over within 12 months. But yeah, either way, these deals, you got to find these types of deals, and we're going to walk through how to do that. So a little bit about us, guys. Let me just catch you up on us without going too much in the weeds, but just to give you a background on our group and each one of us. Who are these random people talking to us about apartments? You may feel like you stepped into an AA meeting, but I'm just going to be real. All right. My name is Jonathan. I was actually a drug addict. I was homeless and went to jail and rehab. And it was only through Jesus Christ that I was set free. All right. Lost my dad when I was in college to cancer. He was the one that inspired me and brought me back to Jesus. All right. One of the hardest moments of my life, but a catalyst that gave me the endless drive to make a difference with my life and help people. All right. I did try single family. And I know a lot of you guys have similar stories of hardship in your life, but it was those moments where you got to say, push through, right? And so anyway, I tried single family and short-term rentals, and actually did pretty well at that, but it didn't do well at being passive. I was working my tail off, right? And now, together with our partners, combined total, we have over a $500 million in assets under management in our apartment portfolio. This is me and Larry right here. We also started to run several side businesses doing multiple seven figures a year in revenue. And most importantly, we've helped hundreds of investors scale into multifamily. And obviously through that, we grow as well. It's a team sport. There's one thing that I want you to be able to repeat and memorize. It's simply commercial real estate is a team sport. You learn how to build relationships. You learn how to partner with people, structure these deals in a way that allows you to get in. Your whole life changes. But we've helped hundreds of investors scale, and that's what's really exciting. This is one of our members and investors we've been able to partner with. And so, and then we got Mr. Larry Kite.
Yes, a little less dramatic story, but I see some God is greats in the chat. That's awesome. He definitely is. And I would have been dead 4 times and in jail 7 or 8 if it wasn't for a
Amen.
God in my life. And that's how Jonathan and I met. If he had not gone through what he had gone through, we wouldn't have met through a ministry. But I kind of had the little more boring route after I escaped my teenage years. Got a degree as a civil engineer, worked at that job for quite a few years, started flipping houses, kind of supplement retirement income is what I thought. And then I looked up and it was another full-time job, and I was doing what Jonathan was talking about earlier, finding a house, getting a loan, grinding it out, mowing the grass, picking up the trash on the weekends, trying to get it sold, and end up accumulating a few of those as rentals, did pretty well. Then I saw the light in time later than I should have, but started buying apartments, built up a portfolio of over 600 units, and we got some great partners on the team now. And altogether, we have a large portfolio of 500 million assets under management. But Jonathan and I started helping other investors. We started having people reach out to get some guidance. We started doing that, had a passion for that, obviously with Christ and our faith being in front of that, and acquired some other businesses. I think we got a picture of an auto glass shop, and I've got, been in some other businesses along the way, and we've been super blessed, but we're glad to be here now. This being our number one priority is to partner with others and help others acquire multifamily, as well as us continue to build our portfolio.
Amen. Yes. And then most importantly, and again, the reason I'm getting into this, guys, is because we value impact over income. If you focus on making a difference more than you do just greedy, right? Bringing in income, you will find powerful partners. So most importantly, we started several ministries. I started a ministry helping survivors of trafficking, a nonprofit coffee shop, and a business that employs the survivors, called Beautifully Made. Larry, this is how we met. He donated a house to the ministry and we use it for immediate shelter for survivors, and we get to invest in our family. So this is the coffee shop right here, and this is me speaking, but we get to invest in our families first and foremost. So I know a lot of you on here want to actually be able to scale and impact your families as well, bring them on the journey and be able to spend more time with them and show them how to make a difference. But the same way that me and him met, right, is why we're showing you this, because you focus on making an impact and not just trying to go and make a bunch of money, right? You actually try and help people, things will change. So a little bit about our company, our accelerator. Our mission is to help 10,000 everyday investors create generational income and generational impact in the next 10 years. So to create a collective $20 billion in assets under management. It's a very powerful group. That's one of our companies we were able to start. So it's a faith-based group. We grow our wealth together. But let's keep going. So the goal on this call, become financially free with just one real estate deal in the next 6 months, investing only 5 to 10 hours per week and leveraging capital partners. So here's the deal, guys. I want you to drop in the chat, why are you here? We're going to go over 3 steps to create financial freedom and blank, right? What is that blank for you? Why are you here? If you have nothing to aim at, if you have nothing that you're aiming at, right? Zig Ziglar says you will hit it every time, right? You aim at nothing, you hit it every time. So why are you looking to grow your portfolio? What is the difference for you that you're looking to make, right? And maybe it's just to replace your income so you can free up your time and focus on more business endeavors. That's fine. Maybe it's to get back at your older brother growing up that picked on you, right? Or whatever that is, right? But maybe it's to start a ministry. Maybe it's to create generational wealth, lasting legacy, right? What is that for you? Buy back my time. I love it, guys. Come on. To learn, freedom and family time, right? What happens if you get an apartment deal, right? What happens when you get an apartment deal and you replaced your income? Why? What then? What are we actually trying to achieve? Come on. Love it. God and wealth, generational wealth. Love it. Own my time and income. That's perfect, guys. It's so killer. This slide right here, you may think, oh, it's a little bit out of the technical part, but our highest level members that have at least 5 million in assets under management right now, and some are scaling to 400 million right now, they all have to visit this frequently. Why am I doing it? You get in there, you stay focused, but you got to come and revisit this. So love it, guys. Keep dropping that in. Step number 1, get your notepads out. Finding the right properties. Let's get into what kind of properties are we focused on? Large scale apartments, again, syndications. We want to pool money together and pool creative financing together. That's very important. Love the comments, guys. It's so powerful. Keep doing that. I promise you're going to be wildly amazed at how far you come. All right. So here's some statistics for you. Larry, you want to knock these up?
Yeah. This definitely still applies. Quote that's been around for a little bit, but the U.S. is short of apartments, 4.3 million needed by 2035 to address the demand that's needed. And the president of what is that? National Multi Housing Corporation,
Housing Council.
maybe something like that. Something important.
National
A lack of
Multi-Housing
availability.
Council.
Yeah, yes, he's an important guy. Knows
Very
what he's
important.
talking about. The lack of available housing is holding our country back. It definitely is. I mean, there's definitely obviously a supply issue across the board, and there's been a construction issue, currently. So it definitely boosts the importance of being able to improve value add apartments that are already available, right?
Yeah. Huge, guys. And that's just I mean, the quotes are kind of talking about new construction, but it all trickles down. Like Larry said, I mean, it's value add. How 2.9 million more need to be renovated and brought up to speed. The idea that we don't have enough apartments or enough housing is just so big right now in today's market. So interest rates, we just released a podcast yesterday about the current Fed cuts in interest rates 2 days ago. And we talked about how that's going to affect multifamily. But the reality is there is so many deals right now that are especially in the 10 to 100 unit range that you've got to get in right now. It's so prevalent, and especially with the interest rate situation right now. So let's talk more about that. But the problem with single family is minimal upside potential. You've got to understand these key distinctions when you're thinking about your buy box, okay? Because single family rentals, and even up to four units, right? It kind of falls in the same deal, but there's minimal upside potential, right? Because obviously it's the value of the single family rental is based on comparables in the area, right? It's based on the comps in the area, the values of the other homes, and it's not based on what apartments is. The value is based on the income. So you don't have you have a low multiplication factor, right? So you have one house, either you're getting rent or you're not, and so you don't have the ability to multiply rents, right? You have an absent property manager typically, right? It's still getting calls in the middle of the night, right? You have a lot lower level property management company or a third party that's not able to give your single family as much attention. Dependent on your personal credit and cash. Now you can say, well, I get loans on single family, but the reality of it is people don't want to invest in single family like they do in multifamily. All right. So multifamily is much more stable, much more opportunity. And so at the end of the day, with single family, you're still dependent on your personal credit and cash. So less doors equals more risk, guys. Either you got rent coming in or you don't. Either you're paying the bills or you're not paying the bills. So 100% occupied or 100% vacant is what I just mentioned. And then obviously, like we already talked about, you need at least 15 deals to actually replace your income, right? To actually see a substantial income at least, right? And they need to be good. But see, with multifamily and larger apartments, like I'm talking about, there's greater upside potential through value add. We call them appreciation multipliers, right? You have the ability to increase the income based on and immediately affect the value, right? So every dollar, here's a rule of thumb for you. If you have an 8% market cap rate, and we'll talk about that in a little bit. If you have an 8% market cap rate, every dollar you increase, whether that's decreasing expenses and increasing income, every dollar you add to the profit of the property equals $12.50 to the value of the property. All right. This is the beautiful thing. This is, if you understand this one concept, this is why people flock to multifamily and want to go and sell all their single family and jump into multifamily, right? Because the cap rate, if you think about it like a business, how is a business valued? It's valued off the profit, right? How much is that business profiting? And then based on the type of business, based on the market demand for that business, there's a multiplier. There's a number that we call a multiple that you times the profit by, and that gives you your potential sell price, your value of the business, right? And that multiple is kind of like cap rate, right? It's based on the condition of the property, based on how it's being ran, and based on the market, right? How much demand in that area is there for that property? And just say across the nation, there's 6 or 7%, typically for market cap rate. You get the property fully up and renovated, it may be around 6% market cap rate. So it would actually be even higher than this situation. But that is the beauty of multifamily, right? You can increase the profits to increase the value. It's not dependent on what the house down the street sold for, right? It's not dependent on the comparables. That's only part of the equation. So, and then you can rapidly scale your net worth with just one transaction. We're about to show you another deal that we did recently and show you some other deals that other people have done. But just like you saw just recently in the 88 unit example that we just broke down, $1.5 million in 2 years. And really it got there within 12 months, but we weren't wanting to sell at that point. 1.5 million immediately to your net worth. That can rapidly scale your net worth with just one transaction, right? And then obviously you're paying limited partners, but anyway, you have anyway, professionally managed properties. All right. So obviously with larger properties, you can have on-site property management, and it's going to be a lot higher level managed properties, and it's just going to be a lot easier there. You're not getting the calls in the middle of the night when the cops show up, right? So if you're looking to be more passive, then you've got to understand that at scale we can afford to hire better people, less risk. All right. So occupancy is more consistent in apartments. You've got diversification. You've got economies of scale, right? More properties under one roof, right? You've got, and then obviously no money out of pocket needed, right? So there's just much more availability and capital for multifamily. People want to be a part of these types of deals. That's very important. Syndication, obviously, that's what we're talking about today. Pooling money together, pooling resources together to invest. Now, if you can't qualify for the loan, there's 3 keys that you need to understand when you want to get a loan for a large property. And the bank is looking for these 3 things. 1, they want you to be liquid 10% of the loan amount, right? You got to have capital. It's 10% of the loan amount. 2, you've got to be have a net worth equal to the loan amount. And number 3, you need to have experience running a similar type of property, whether that's in property management or whatever that may be. You've got to have some kind of experience. All right. So the beautiful thing about real estate is not only can you have a loan sponsor, you can partner up with people to bring experience, bring that part of the equation, and then, you know, get your first deal underway, get 30, 40 units or 50 units even. And then you can go on to sponsor other people's loans once you have that first deal. And so basically all you gotta do is sign your name on a loan document, and you can get, just say, 20 to 30% equity of the deal. And then creative financing. So we're going to go into that a little bit, but obviously it's typically in multifamily larger deals, you're not getting 100% of the deal financed typically. We have had deals that we have a 16 unit deal that was 95% seller finance, but typically you're not getting 100%. You get the seller to carry back part of the deal. You know, finance, just say 500,000 of a $3 million deal or whatever that is. And we can talk more about that. All right. Let me walk you through the $1 million math. I just talked to you a little bit about market cap rate, but just suppose your property can sell for 6.5% out of a market cap rate. Here's the math for you to be able to create $1 million through real estate, and through the next year or whatever that is for you. But the timeline would typically be, if you were going to increase rent or increase income in a property, we need just say 12 to 24 months, right? So this is your math. If you're going to do a 9-unit property, you need to increase $602 per unit, whether that's adding extra value to the unit, maybe charging for different services. You can add lockers to rent out lockers. You can add washer and dryer. You can add valet trash. I mean, there's many different things that you can do. Bulk cable, bulk Wi-Fi. You can do different things to increase the income. Now, ideally, you're buying it for less than market rents. You're improving the property, and you're being able to increase the rent based on obvious. We're increasing the quality of life for our tenants. Okay, but $602 is not very reasonable, right? It may happen, but that's not very reasonable. But here's what happens. You go to 15 units and you're at $361. We're getting a little bit better here, right? That's probably a lot more doable to find a property under market rents, increase the other income in the property, decrease expenses. We get to $1 million by doing that for 15 units. 32 units, all you've got to do is increase $169 per unit, right? In profit to create $1 million. All right, 48 units, 112, 88 units, $61. Now we're just talking about inflation, right? Just they attribute that to inflation, right? We're just creating $1 million on 88 units is very quick, very easy. 100 units, $54 And here's 100 units, which a typical increase may be $125 that we're looking for. And that creates $2.3 million in added equity. And again, you could sell the property for $2.3 million more. So that's your math, guys. That is why people love multifamily and commercial real estate. Pretty powerful opportunity. This is one of the greatest slides here, guys. You got to take a picture of this. This is how we structure the equity split. Larry can walk you through it, but this is just a model that you can imitate, right? It's not a for sure everybody's got to be this exact percent, but it's an idea. It's a rule of thumb for you.
Yeah, that's right. Yeah, and if you look at this chart, if you see limited partners down in the lower left, everything else is really the general partner. In that deal that we went over, we were wearing most of those hats in the general partner, but as the general partner. But you can carve the general partnership, which is the active people in the deal, all these different ways. And one of those key things you got to have is a loan sponsor that Jonathan mentioned earlier. And for that, these are just ballpark equity splits that it can definitely vary depending on the deal, depending on the circumstances. But 20% good rule of thumb for a loan sponsor to come in and guarantee the loan. They have the balance sheet, the net worth, and the liquidity to do that. Then the asset management could be 15%. Finding the deal could be 5%. So someone that has no experience, somebody had posted earlier they had a deal. If they just handed that off, they could just retain 5% equity in the deal, and all they had to do was find it and hand it off to a more experienced team, or they could stay in the deal and provide some of these other services. Maybe they could stay on as the on-site partner that's going to go check on the deal every week, and that's 10%. Project management kind of goes, hand in hand with that. They're going to manage the contractors and the capital improvement plan and the vendors, and that's 10%. Somebody's got to raise the capital, and again, that can be the same person. The loan sponsor may have access to raising capital, and then maybe they get another 10%. And then managing that capital ongoing, making sure the investors are taken care of, they get the preferred returns, they get their payouts and everything they need accordingly. That's another 5%. So again, those two may make sense to be combined, would be 15%. So these aren't locked in stone. Limited partners are shown here as 20%. That could be 30, 40, 50%. There's some people that do deals, syndications, where the limited partners get 70% of the deal. And then the general partners retain 30 and they split that other 30 up. It depends on really the deal circumstances, parameters, but hopefully that gives you a good idea of all the different ways that you can bring different people with different skills and resources to the table. And it's a team sport. And when you've got millions of dollars involved, it's a little bit easier or enough to go around for for many people to be involved.
Many people can win. A lot more people can be wealthy, can become wealthy through these deals. Yeah, we leave a little sliver there for really anybody that other people that you would like to bring on, right? Like you can bring on a advisor, right? There's people who may give 5-10% equity just for somebody to look over their shoulder and be able to make sure they're doing it right and all this kind of stuff, right? Or maybe you want to give more to limited partners, or maybe you want to give more to your on-site partner, whatever that looks like. But
The seller could be
seller.
the seller of the property. Hey, take some off the purchase price or take back some money and we'll keep you in as a partner, right?
Exactly. Yeah. Yeah. So look, guys, this is the beautiful thing about real estate. You can slice it up however you want. But the cool thing is here is if maybe you can't be the loan sponsor, maybe you need to qualify for that. And maybe you don't have the capital. Maybe you don't want to be the limited partner. You want to just use other people's money. You can learn all the other things. So without risking any of your own debt, right? You're not signing your name on the loan docs. You're not bringing a dime to the table. You can learn all these other things: how to find good deals, how to manage the property, how to asset management, or you can partner with it. And either way, you can be a part of these deals. You just get these skills down, right? And somebody asked about how to find a loan sponsor. Exactly. You figure out how to find a loan sponsor, you're able to lock in deals at this size that can change your life, change generations to come, and also change your limited partner's life. That's another big thing. So we'll talk about how to find a loan sponsor, find limited partners in just a little bit. But let's go through another case study. Who's still with me before I move on? Just want to make sure, is everybody tracking with me? Does this make sense? Are you starting to pick up some things? Starting to pick up some nuggets here and there? All right, good. All right, awesome. All right, remember, if you have questions, drop it in the Q&A. We're going to make sure everybody's super clear by the end of this call. We're going to go through all questions in just a little bit. All right, cool. Let's keep rocking. Picking up what you're laying down.
If you didn't like the last one, you may like this one better.
Pick and choose.
And
All right.
this one's about half the size, so maybe for those getting started, a little more may feel a little more manageable. Or this is a 44 unit. Certainly nothing wrong with a 20 unit, and you can do the math on the numbers. You just add a zero to as you get bigger deals. But
right.
44 unit, we actually converted it to a 45 unit. We turned the office into a rentable unit and do a short-term rental on that. But the original price was 2.4 million. Had a total cost of 2.6 million. Didn't have to do a lot of capital improvements. The plan was just to do the unit renovations more organically through the operations of the property as we increase the rents. But the play was to increase the rent. And that's always the play, or decrease expenses, but you can only decrease expenses so much. And you got to do one or the other to get the net income higher, which is how the property is valued. So we were able to increase the rents, and I think, lower the expenses pretty decent amount as well. So in 15 months, we were able to get an appraisal of $3.8 million for the property after being all in for 2.6. So that was 1.2 million equity created with an ongoing cash flow after that. Refinance. What happened there was a refinance with that appraisal. Ongoing cash flow of $90,000 to $100,000 per year, and the value today has increased over 4 million, 4.5 here. May have dropped a little bit with cap rates coming down, but it's still up there.
Still a
Good enough.
Still a killer.
So same role, general partner, and this was a smaller deal that only required $500,000 equity or capital brought to the table to get everything closed. Reserves, necessary to operate the property for the initial period. But we did bring on a limited partner for that $500,000, and they got 10% preferred return and 10% equity in the ownership of the property. So they're completely passive. They weren't required to sign any loan documents. Typically lenders want any one person that has over 20% ownership to sign the loan, just as a fun fact there. But so what we ended up with was $0 out of pocket, 90% ownership, and an equity earned of 2 million. I think that's factoring in that value today, obviously. So, but for the limited partner, I've heard people say, and I always bring this up, they see this deal real quick, or you tell them, I got somebody to put up all the money, and they only got 10% of the deal. Why would they do that? Well, if you think about what they're getting a killer return, and they didn't have to do anything. So that's the bottom line. They were a lender that was used to probably getting about 10 to 12% interest. And in this case, they got the 10% plus they got 10% ownership that will never go away. As the property is refinanced, they get 10% of the proceeds, they get 10% of the cash flow, they'll get 10% when it sells down the road at some point in the future. So
yeah, killer deal, right? Yeah. So the operator bringing $0 out of pocket, making 90% ownership. Now, again, some people give away 10, 20, 30, even 40%, but our model is value add opportunities. So we're not necessarily looking at a 5, 10 year play before they get their money back or if they get an increase in their money, right? So we're not having to give away more ownership. So we kind of flip the model on its head. And look, here's the thing, guys. This is another level that both me and Larry weren't playing at one time. And the only difference between you guys and deals like this is just your level of thinking, right? The people that are in the room, right? And being able to understand how these deals are assessed. Okay. Like Larry's the guy that got Larry is, his name is Perry, and Perry was doing these deals. And he's like, Larry, you got to get into commercial real estate. You got to get into apartments. And Larry's like seeing him do all these deals. It's like, yeah, that sounds like a lot. It sounds scary, right? And sure enough, Perry's doing some big deals, making millions of dollars on one deal versus, doing a bunch of single families, making a few thousand or tens of thousands, right? And then same thing happened with me and Larry. Larry, I'm partnering with Larry. I'm doing well in single family, and then I'm just looking over at him doing one deal, make $1 million, $2 million. I'm like, man, I am in the wrong game. So look, you guys, you gotta be able to shift your mindset and be able to focus on what is the highest opportunity for your time. Okay, this was $0 out of our own pocket. All right, so let's talk about your buying criteria. This is very important. So most people are just trying to go after any deal and stay in a distracted rabbit hole that never produces. All right. And that's because you're just going after everything. You're just like, oh, I might do single family, I might do multifamily, I might do commercial, warehouse, all kind of different things. And you're not narrowing it down. But then even within the sector of multifamily, if you're looking for anything from 10 to 1,000 units, you're looking for, all over the United States, right? Like, look, I know people that do look all over, but I'm going to encourage you guys to focus on a smaller niche. So then when this deal comes across a broker's plate or anybody, they think of you. All right. So we need to build your brand. So first off, based on where you're located, I would advise you to choose a geography that is something, first off, that you feel like you want to do, right? If you're in California, you say, I don't want to invest in California, that's totally fine. If you do want to invest in California, do it, right? But whatever your preference is, I know a lot of investors that don't want to invest in blue states, right? And that's fine. But I would say choose an area that's within a 100-mile radius of yourself for the most part, unless you're just totally adverse to investing in the area you're in. All right. Now, look, you can invest remotely. There's even some positives to investing remotely and far away because you're forced to put in systems and make things more automated, right? Instead of you being able to go visit the property anytime you want. However, if you are investing outside of just say 50-mile radius, you've got to have a bigger deal. All right, because you need more meat on the bone to make it worth your time, if that makes sense, right? Because that means either you're going to have to fly out to that property to go visit it whenever you want to visit it, right? And you can manage it with a good third party, but it's still worthwhile. You need to go have somebody laying eyes on it. Or if you're not going to be laying eyes on it, you need to partner with somebody that's called boots on the ground, which we talked to you about earlier. Have somebody just checking in, making sure the property management company is doing what they're supposed to be doing every once in a while, right? Maybe, a couple times a month, just going and checking on, right? So if you're going to either travel to look at the property or you're going to bring on a partner to look at the property, that means your increased expenses, you've got to have a bigger deal. All right. So our buy box is typically 30 plus units. However, within 50-mile radius, we'll do anything like 10 units and above. Right? If it's in our backyard, we'll take it down, right? Because we already got a team here. But outside of a 50, 75-mile radius, we need to be like 50, 75 units plus, right? But ideally around 30 plus units if it's that's our ideal range. All right. But we're focused on Georgia, Florida, Alabama. That's really where we're looking at. We're doing major states. And so that's where we're focused. Okay. So I would choose at least a whole state for you and just learn that state, right? Because again, we're not focusing on just one or two cities, because this is not the same thing as single family. There's not as much inventory in in multifamily as there is in single family, right? You want your search parameters to be broad, your buy box to be small, so that we're able to really attract better, more leads. Okay. And then as you grow your brand, you will obviously be able to focus on smaller, tighter areas, or just get more deals around your area. Right. And you can look at it like grow the brand, grow the area, but focus is you'll be able to get more in your area once you have a bigger presence in your area. All right. So value add, light to moderate value add is very important to understand. We're not doing heavy guts or new construction, things that are big time renovations. That's not what's conducive for today's market. You got to think like new construction, heavy guts, things that are less than 50% occupied are going to be a bigger risk, because there's a longer lag time to being able to get it to income producing, something that's actually producing income. We buy for cash flow. We want to ideally be buying properties that are cash flow day one, that are in the green day one, right? So that's our goal. So I would focus on like that 88 unit. All that we had to do was come in and change out the property management company, right? Improve property management. Very little renovations were even needed. But we typically will budget, a little bit of renovations. But those are the types of plays you really want. All right, AB areas, BC properties. Look, don't get caught up in the classes right now. It's just Class A is your nicest properties that are recently built the past 5 years, or recently updated the past 5 years. So, just focus on, we want to kind of be in the middle there. We do not want to be in Class D properties. That's number one, right? We don't want to be in what we call war zones. Class D is like war zones, right? There's violence. It's just a lot of gang stuff. It's not a very good area. And it's typically one you have to bring your gun. It's not the best areas, and it doesn't appreciate. It's gonna be a lot of work. You're gonna attract bad tenants. You're gonna have a higher expense ratio. It's just not what you want. Okay. So we're looking for Class B and C areas and B and C properties to bring them up in that class. Okay. And then lastly, all in at 70-80% of stabilized value. This is not very confusing. Just understand stabilized value is like in single family rentals, it's after repair value, right? So once you increase and improve the property, we increase the value of the property. And so what we want to do is look at these deals. We are looking for deals where we are in at 70 to 80% of the opportunity of the market value once it's renovated. We buy it for that minus the repair cost. So our all-in cost is 70, 80% of the stabilized value, the aftermarket repair value, right? And then to actually make an offer to the seller, we just subtract the renovation cost. All right. So that's very important. All right. Ready to move to step 2? Drop your questions in the Q&A section if you got questions on that, anything we covered, but we want to move on to keep things rolling, make sure we can cover everything. We're a little behind pace here. All right, let's do it. All right. Off-market lead flow. Create a machine of off-market lead flow. Very important, guys. I'm about to show you one of the most important things that you can take away from this. Because look, most people get stuck not on the capital raising. We can show you how to raise capital, but if you don't know how to bring in a lot of leads, a lot of off-market deals, go direct to seller, be able to find those pocket listings from brokers and be able to get good deals, none of the capital raising matters, right? So this is the most important thing. This will attract or detract capital partners. All right. So, and a quote I always say, if it's not predictable, it's not repeatable. And if it's not repeatable, it's not a business, it's just a hobby. We cannot build on hope, we build on systems. So if your goal is to replace your income in the next 6, 12 months, whatever that is for you, you've got to build a system. You've got to build metrics. Who do I need to reach out to? How many of those people do I need to reach out to? And how many offers do I need to get out each week, each day? What does that look like? So that we're not just hoping, right? We can get into this. We need to put a clear plan in place and measure it. All right. So number one, this is just one method that I'm going to recommend, just one of the methods that I would recommend for if you want to get in quickly. All right. And this is simply running a list, pulling a list of properties. And you can get this from public data, or you can use aggregators like dealfire.ai. That's one way you can go find it, or you can also use CoStar or Reonomy. They're more expensive, but you can use the recommendation is to use AI to collect the most accurate data on the market. Okay, so dealfire.ai is also our software. It compares with like Reonomy, but there's also softwares out there like PropStream, ListSource, different things like that that you can also use. Everybody's pulling from pretty much the same data sources, guys. It's not, don't overthink this, but we do have a software called dealfire.ai. You can use that. It's less expensive. CoStar is obviously the best out there, but either way, CoStar is a lot more expensive. So if you're just getting started, I wouldn't recommend it. But you're pulling a list of the properties in your buy box. So just say 100-mile radius. And the big thing about your buy box too, guys, I didn't mention earlier, one of your biggest advantages as a new or small investor is being local, right? Because you know your market a lot better than the institutions, right? They're just doing research on your market where you actually live there, right? So again, if you don't want to invest locally, totally fine. Just understand that it's really good if you can, right? All right. So first off, you're going to run a list. Just say pull 1,000 properties in your buy box, and then you're going to create a script. All right. So one thing I can hook you guys up with this, but it's a proven script to convert leads into deals. All right. So you want a script that can actually reach out to sellers or reach out to the owners of the property and actually get them to want to sell, right? Or build relationship with them that does convert, right? Because reaching out to owners is so powerful, guys. It's going to change the game. All right, so now what we want to do is take that list, take that script, and we can either hire a VA or you can do this yourself. But I would highly recommend, if you have the budget for it, I would hire a virtual assistant, all right? And you can pay them $4 or $5 an hour from Upwork.com. Pay them for 20 hours a week, so $100 a week, whatever that is. But they're all day for half a day. They're just calling owners, and they take that list of properties and that script, and they just call owners. Now, again, I know a lot of high-level investors that do it themselves, and so that's totally fine. But I just want to give two options here, right? If you want to do it yourself, I know a lot of people that do well, and they love to do it because essentially you're networking with peers, right? You're not just calling people. You're talking to someone who owns properties. There's no better investment of your time than talking to people who currently own apartments, right? So if you're talking to those people, you're building relationships, you're getting good deals. One deal can change your life, right? Now, if you have a little bit more budget, again, $100 a week, I would say it'd be totally worth your investment to just hire a VA, hire a virtual assistant, right? And get them to just start calling. And what they do is they send you all the leads, that all the people that say, yes, I'm open to an offer. And then you can just follow up with those owners. Okay. So that's an option for you. We also have an agency that you can use where we actually do it for you. So that's something we can chat about, but we have a opportunity where we could hire a VA for you. We could manage that VA. We could pool the property for you, all that kind of stuff, pull the list of properties, all that stuff. All right, so track metrics. Out of 100 conversations, you should get 10 to 20 solid leads to follow up with. Aim for at least 3 to 5 LOIs per week. So letters of intent. All that is a non-legally binding handshake, right? It's just saying, here's an offer on your property. And so that's what you want to get to, is be able to assess these deals. We'll talk about in a little bit, but you just need to have 100 conversations, 10 to 20 solid leads, follow up with, And then you should be getting 3 to 5 LOIs out per week if you want to be able to truly lock in a deal in the next couple months or next few months and actually close on the deal in the next 6 months, right? Like if you're serious, if you want to attack this, I would say get 3 to 5 offers out per week. I promise you're going to do it. All right. And then very important, follow up, guys. Use the rest, follow up with the rest using AI chatbots. That'll help leverage your time a lot better. Dealfire.ai has that. AI-powered direct mail blaster, same thing on Dealfire.ai. Email blaster, text sequences. We also have a CRM portion of the Dealfire. Fortunes are made in the follow-up, guys. Fortunes are made in the follow-up. I don't think we'd have very many deals if we didn't follow up like crazy, right? If we weren't very intentional about following up, we'd have not even half of what we currently have. All right. And then here, look, there's other funnels. If you don't like this funnel, I just shared this one because it's probably one of the fastest paths for you. If we say, I got to get deals in by the end of the week, right? I got to get leads in. If that's your mindset, then this is a great funnel. But there's other ones, like you can do event funnels where you're joining local events and you're also hosting events. There's many methods and systems and strategies around that we have that we could share with you. Broker funnels, vendors like management companies, attorneys, roofers, HVAC companies, CPAs, all kind of different things. All you want to do is think, who is right now talking with owners of apartment buildings? Who is an owner of an apartment building conversing with right now? And I need to build out how to get in front of those people and how to make sure I'm building a network that is finding me a deal, that is actively finding me a deal. So here's just a few people. 2 hits on an apartment list called by VA, pipeline opening up. So these are just people that just sharing just wins about this machine that we're talking about. Once you put the word out there, deals start flowing, right? These are just encouraging you guys. Big win today, accepted LOI, praise the Lord. Deals keep coming. This one system I'm showing you guys right now, like it produces. Just follow it verbatim, guys. We are in final negotiations with a seller. Hope to have a purchase and seller agreement drafted this week. And then we got a second 60-unit deal in Dallas, Texas. Our LOI has been accepted. So, all right, just to encourage you guys, get the lead flow going. Step 3, key financing, leveraging other people's money, credit, and time. All right. Here's Orlando, raised $4.5 million by day 4 of our capital raise system, right? So in 4 days, the same system I'm about to show you right now, the same things, he raised $4.5 million in 4 days. All right. If Orlando can do it, you guys can do it. All right. I just want to encourage you. All right. So here's the problem. How many of you are going to be like Orlando? How many of you are going to be able to raise capital on this call? Drop in the thing. If drop in the chat, if you're going to raise capital, you're going to push through and figure it out. You're going to learn to do it. Drop in the chat. I want to see you. Who's with me? Who wants to raise some capital? All right. Yeah, we got people in there. All right, cool. Let's go. See people raising your hand. All right. Let's rock and roll. So here's the problem. You can't scale in this game without network. Your network determines your net worth. You've heard that statement before, but it's real. All right. You get stuck when everything is dependent on you, relying on your cash, your time, and your credit. All right. But you can multiply. Somebody put in the chat, multiply. You want to multiply this year, 2025, put in the chat, multiply. All right. You can multiply. All right, cool. We got people on board. Let's go. You can multiply when you expand your network and raise private money. Very important. We're going to talk about that. And then how to get a loan sponsor. These are the 2 things and 3 things. Put key people in the right seats. All right. You learn how to, there's plenty of people out there that actually love to capital raise. And if you want to partner with your weaknesses and say, I just don't want to do the capital raise, you can partner with those people. Or you can learn that skill yourself and save that money, save that part, and you can have one of the highest leverage skill sets of raising capital. So let's talk about it. All right, finding private money. Many people have a hard time funding deals because they lack resources, not because they lack resources, but because they lack vision and resourcefulness. And I'm going to prove that statement to you in just a few minutes. We're going to play a game and I'm going to prove that statement to you. All right. So if you want to play a game, you better stick around because we're about to go into it. So here's what I want you to do. Okay. Big rules of thumb around finding private money. Very important. All right. So you're going to make your first few deals extremely attractive for your limited partners. Okay. The people bringing money into your deal. You've got to make sure it's very attractive. And here's how you do it. You give 8 to 10% preferred returns, take no management fee, pay monthly if possible, raise enough to pay them on month 1, and most importantly, under promise and over deliver. 8 to 10% preferred returns just simply means they get paid first. All right. They invest $100,000, they get paid $8,000 a year. And then we typically pay them out quarterly. But on your first one, if it's more attractive to the person, you can pay monthly. Okay. And then no management fee in the beginning. We typically take an acquisition fee. So that's typically just say 3 to 5%, maybe 2 to 5% of the purchase price you take out at closing. So here's one of the big things I advise newer investors that are really wanting to replace their income very quickly and wanting to go all in on this, or they want to be able to replace their income so they can just spend all their time in multifamily. The fastest way to do that is to close and take an acquisition fee at the closing table, right? So on a $5 million deal, 3%, $150,000, very typical for a first-time deal when we're talking about leveraging other people. You know, as the GP ownership, you get $150,000 at the closing table. All right, and I'll show you some examples of that, of other people that did that and how they got paid, how they did that. But that's what would allow you to kind of free up some of your time to invest more in this, right? But we're talking about for limited partners, you always want to under promise and over deliver. All right. Under promise and over deliver. That's a rule of life for you, not just capital raising, but a rule of life. If the deal is good enough, you will have people lining up at the door to fund it. All right. I got to say that, guys. Look, that's not tactical, but I can't overemphasize that because it's very important. Like we oversubscribe our deals every time, and we have very little that we have to do in terms of marketing. We know a lot of marketing strategies, but we don't even have to do it because it's just, and this is not even based on, a growing network of, in our mastermind or whatever. Like this is just because they're deals that are good. All right. Come to the table with a clear and simple plan using your underwriting analysis. You don't need a fancy software that generates queued packets for investors. All right. Keep it simple. It's better for you and your investor. We use a one-page investment summary. All right. We can help you guys out with that as well if you need that, but keep it simple. All right. These guys are not multifamily investors typically. They are business owners and high-level executives that are wanting to focus all their time in their current business, but allow their money to be invested in real estate to get higher returns, right? They don't know everything about real estate. So just keep it simple. What would appeal to them? We can show you guys some templates on that. All right, leverage a loan sponsor that has the credibility. Use that credibility of the other partners. And look, you can find loan sponsors using masterminds. You can create investor. We also create investor credibility packages for clients that also builds their credibility. But that loan sponsor, you can, you're on this call. Every single one of you has the ability to execute on this. You're on this call. So you are getting in the room with people that you can network with and find other people. But we can talk about how to find loan sponsors in just a little bit. But the big thing with loan sponsors is it's similar to raising money, right? How to find those guys is the same thing with people who have money. You just want to find people that are are multifamily investors. Okay, so big things around that. You can be a part of events, be a part of masterminds, but there's also funnels that you can use. We've got a system for LinkedIn that finds loan sponsors as well that you can use. We just had a guy take down a 34 unit deal in Michigan. No, 48 unit deal in Michigan and it was loan sponsors found off LinkedIn. So there's many ways to do it, or we like to sponsor loans. So if it's a good deal, we'd like to be a part of it. Just needs to be a good deal in our buy box. So establish an investor lead generation funnel through email, LinkedIn, podcast partnerships, etc. Example, one of our members books 2 to 3 investor appointments per week through a podcast partnership. All right. There's many strategies we don't have time to go into, but at least by your second deal, you need to start converting cold leads. All right. So just one podcast partnership, right? You pay them $500 a month and they send them like 2 to 3 investor appointments every single week. Now, again, if you want to do it with no money out of pocket, it's just leverage social media. I was just talking to a guy the other day, raised $40 million in 12 months just through social media. 40 million in 12 months. So that's the power of social media. And so you want to set up funnels. And again, I don't have time to go into all of the things, but a webinar, you drive people to from social media, and you share about your business, share about your deal. Again, just like Orlando raised $4.5 million in 4 days. It's very, people want to be a part of these types of deals. All right. Let's run through this really quick. Key financing, leverage other people's money is the premise of playing smarter. Earnest money deposit funding, you can connect with other investors or funds that specialize in earnest money deposit. We actually have attorneys on our team that also have a fund for earnest money. So when you lock in a contract, getting the earnest money deposit is very key. Or you can go straight into leveraging other people's money out of the gate, leveraging capital partners to put up the earnest money, which is typically 1% of the purchase price. Syndications, pulling investors' money together. That's what we're talking about. AI, drop in the chat if you like AI, if you're on board with it or you don't like it. Just put in the chat. I want to see who loves AI, who hates it, who doesn't know about it, on the fence, whatever that is. I want to see. All right, cool. We got some people that like it. All right, good. AI, it's in town. All right, yeah. So Nicole doesn't know about it, but some people love it. Yeah, get it. Yeah. All right. Well, look, here's the thing. All right, AI funding, whether you love it or hate it, whether you like it or use it, AI, I mean, you're probably using it whether you know it or not, but yet AI has many features right now that is changing the game. And even as I say this, AI is probably way more advanced than I think it is, right? Even as I say, it's probably already made a bunch more improvements, right? But AI in the chat bots, those are very trained. Those are very good for nurturing investors, okay? If you can generate leads, what you can do is have AI chatbots nurture those investors. Also, AI learning to communicate personalized messages with those investors. But then also you can find investors using AI, right? So there's, again, many things that we don't have time to go into as much, but AI right now, guys, is scanning data across the internet, across social media, finding people. You can train it to find people who are ready to invest. All right. So again, it's looking at social media posts. So again, AI is a big deal. That yeah, I love it. AI is my best friend. Love it. I think that's Larry. AI is his best friend. All right.
We've been a little on the outs here lately.
All right, look. Well, look, let's keep moving for time's sake. Creative financing. So again, seller financing is just you can offer the seller a higher price if they give you better terms. Help seller avoid capital gains taxes. We can go into that a little later. Private lending. If you have questions on this stuff, guys, put it in the Q&A. Private lending. Finding private lenders to replace the bank should give you better terms in a shifting market. All right, couple pro tips. There's a text blaster called Hit 'em Up. All right. It allows you to send personal messages in mass blast. Okay. So that's a big tool for a lot of us that are raising a lot of capital. LinkedIn newsletter and social media. We just had someone raise $40 million in the past 12 months alone. So remember these terms: LinkedIn newsletter. Get that started. Okay. Social media. And again, Zoom presentations as a CTA from all outreach. As simple as that sounds, just link a Zoom presentation, a webinar just like this in all your CTAs and all your posts on social media, or at least most of them, and have people sign up for this weekly. I promise you, you will go so fast in this game if you just start building that network. You're going to have a lot of capital ready to go and ready to deploy, or in that deal ready to fund it. Okay. All right, look, let's play a game real quick. Deal or no deal, you decide. All right, so you got a Class A. Everybody wanting to play a game real quick? I'm going to prove to you how you can raise capital right now. All right, so let's go through it. You can wholesale this deal or you can buy it. All right, Class A, 75 units, apartments, top of the line, nicest apartments out there. And it's got a distressed owner that needs to sell fast. All right, 75 units, beautiful apartment, Class A, perfect condition, just assessed by an inspector. Okay, and the purchase price, they want $12 million. They got to sell fast. All right, so it's just an incredible deal. And a buyer in Miami just committed $20 million. If you just lock that deal in, the buyer said, hey, look, I will buy that deal from you for $20 million right now. All right. So, and imagine this is in a perfect world. It's guaranteed. Everything's guaranteed. It's going to happen. So if you just buy that deal for $12 million, you get $20 million net profit, $8 million. Here's the catch. You must buy the deal in 30 days, and you cannot use your own money. You must raise the $3 million. How much? $3 million down payment to purchase it for $12 million. How many believe if you knew you're going to have a net profit of $8 million, if you just come up with $3 million in 30 days, how many believe you would be able to figure it out? How many of you would tell me, I will figure out a way to get that deal done? I will figure out a way to raise $3 million. Come on. All right. You guys are with me. Let's go. If you knew without a doubt $8 million is about to be dropped in your bank account, how many of you are going to say, I will get it done? All right. We got people on board.
Got some doers.
Got some doers. Let's go. Yeah, buddy. I'll get it done. All right, cool. So, point of this story, guys, you must learn to create killer deals and stay focused. If you don't lack resources, you lack resourcefulness, you lack vision. I promise you, I've seen it time and time again, that if you have a good deal, you will be able to get that deal funded. So let's keep going. Key so far. So we got some more to share with you guys, but so far we've talked about the right properties, focusing on multifamily acquisitions, their syndications, or creative financing, generating consistent off-market lead flow, off-market being the key word, and then learning the fundamentals of leveraging other people's money and time. Key deal structure. Just so I understand. So how many of you have feel like you learned something so far? We're going to keep going here. I know we're running late. How many of you have got some value? How many of you have learned a few things? All right, Ricardo, let's go. Nicole, all right. Good. All right, I just want to make sure you're still with me. So we're going to keep going here. I appreciate you guys being here. There's two things I need to remind you. There's one word and two ways that you're going to react to it, because here's the deal. You're going to get into big deals like apartments. You're all going to face this one word. You have this opportunity to experience this. You're going to raise capital. You're going to get out there, but you're going to experience the word fear, right? But I want to remind you, just because I want to be a shepherd of the room and make sure you understand, as you go into this journey, either you're going to react to that fear and you're going to forget everything and run, or you're going to be the one that faces everything and rise. Let me hear, who is going to be the second person? You're going to face everything and rise. How many of you are going to be that when you experience those roadblocks? Because look, you're venturing to build generational wealth. You're venturing to replace your income. You're venturing to be able to pass down a legacy. You're all going to have that opportunity. And I just want to encourage you right now, you can do it, guys. You can be the one, face everything and rise. Who's going to put in there? All right, got you in. People are saying we're going to face everything and rise. Love it. Well, look, I want to share with you really quick. Option number one, guys. I mean, you've got a lot of information. Now you guys can go out and do a bunch of with it. You can go try and do this on your own, right? It may take you years of trial and error, a lot of effort that yields nothing, or wasted time you can never get back. And look, I'm all for it. I mean, a lot of you have the ability to execute on your own. But again, if there's anything you remember, commercial real estate is a team sport. You need to be able to invite people on your team and partner with people. All right. So doing it as a team, and that is why Larry and I are even talking about this today, is because we realize the power of doing it in teams, partnering with people, allowing people to come and be boots on the ground, have deals that we can sponsor or we can be a part of, right? That's the power of coming together. So I want to put this out there for you guys, and just give you this opportunity. Option number two, you can do this with us. All right. In just a second, I'm going to reveal probably the most important opportunity we've ever shared. And once you close your first deal, you become a new you. Right. So this is very important. I want to walk you guys through this. I want to introduce to you something we're just rolling out. It's called Apartment Launch. All right. Apartment Launch is the single greatest strategy to buying off market apartments. All right. It is a step-by-step approach that creates life-changing passive income and generational wealth. All right. Just for buying apartments. Okay. Our process that I'm about to walk you through, it allows you to scale faster using other people's money instead of your own. And so what is it? What is Apartment Launch? It's a 4-day apartment buying training I want to offer to you guys. All right. This is going to be a high level 4-day training with me and Larry and some of our partners. We're going to be walking you through 4 days of just hand holding, right? It's going to be very intense, very, the word's escaping me, intensive. It's going to be an intensive. Okay. Finding off market deals. Day number one, set your buy box and immediately jump into finding the deals that no one else can find through our deal systems. All right. And software. So we have several systems in place, but number one, day one, we want to jump on with you and we're going to walk through for about an hour and a half just on finding deals. All right. Just on finding off market, going direct to seller. And we want to walk you hand in hand through finding those deals that no one else can find, right? We want to be in an auction of one. All right. Day number two, we're actually going to be doing negotiation. So we're going to walk through how to actually connect with sellers, build your credibility, become the expert in your field, and actually communicate well, and then negotiate the deal. So we're going to be putting our calling scripts into your business. So transferring our business systems into your operations and negotiate the playbook, or negotiating with our playbook so you can get the best deals and the prices. Okay. So that's very important. You don't just want to find deals and then not be able to close them, or not be able to actually get good deals on them, get good prices. All right. Day number 3 is going to be one of the wildest days, because we're going to be partnering with you to make sure you understand how to assess and underwrite these deals, making sure you have the confidence to talk with sellers, but also how to analyze and underwrite these deals, and then actually submit offers, submit letters of intent. All right. So this is where we're going to, and you're going to have the backing of us. So we're going to be backing you on these actual LOIs, these letters of intent, these offers, but you're actually going to real time submit offers. All right. And you may say, well, I'm not ready for that. You will feel 100% confident. And plus, we are backing you. Okay. But number one, I know a lot of you are serious about getting into apartments this year or in the next 6 months. We want to partner with you and we want to push you. We're going to be right there holding your hand, making sure you're doing this. Okay. So this is going to be one of the biggest breakthroughs, day number 3. All right. Day number 4, capital raise machine. So we're going to spend an entire day. This starts next Monday, or actually in 2 days, Saturday, Sunday, 3 days. Monday, the 22nd at 1 p.m. Eastern time, we are going live And we are going to be walking through all these days. So we're going to be starting day 1 on Monday, and day 4 will be Thursday at 1 p.m. Eastern time. There will be recordings on all these things. But day number 4, we are talking about the capital raise machine. This is the same machine that has raised millions and millions of dollars amongst a lot of people. Just walking you step by step through this. So this is the industry's top capital raising training packed into one day. All right. So showing you how to go from depending on friends and family to attracting and nurturing cold leads of investors to put money in your deal. All right. So we're actually going into the trenches with you to actually set up the funnels, make sure you have everything you need to be raising capital. And not only that, identify sources for funding the entirety of your next deal. All right. So that is, I mean, and I know a lot of people out there that are teaching this kind of thing. And I promise you, there is no one teaching it at this level. We have a playbook that covers every type of capital raising and literally just inputs the templates into your business. So Linnea went from 0 to 88 units in 3 months and then raised $35 million in a fund after that. Okay. And she actually shared I'll have to send you guys her training on how exactly she did that. She breaks it down in our community on how she did this. Okay. 0 to 88 units. Pretty insane. And she raised $35 million. She can break down this exact same system. But the things that we're talking about is at the top of the line, guys. But look, we're going to have live trainings, worksheets, checklists, templates, and a lot more. Everything you need in apartment launch to not just learn what you hear, but retain and take action now. Okay. You're going to leave with practical tools to start buying and investing in apartments using other people's money this year. Okay. That's very important. And then Q&A with our leadership team. Time every single day to get personalized feedback on your deal or situation from experts that have over 30 years of experience in commercial real estate and represent over $1 billion in transactions. And we're going to assure you walk away with the most updated advice on the market. How many of you know you can't be taking advice from things that worked 3 years ago or 2 years ago or last year, right? How many of you know we're in a different market? How many of you know things have changed just over the past year? You need to be in tune with what's going on in today's market. All right. This is the moment where you get ultra clear on exactly what you need to do to see your goals realized this year. Okay. So look, here's our offer. Currently, people pay us in the RA Boardroom Mastermind $58,000, right? People have paid our leadership team for just a 2-day event to learn one aspect of apartments, $40,000. But our current annual event, a 1-day event, is $5,000. But today, the current price, apartment launch 4-day workshop, which is normally $7,347, is $97. We just brought it way down. Actually, it'll be $497 ongoing, but the value is about over $7,000 if we sell everything individually. So this is just today, $97 only on this presentation, guys. Go to apartmentlaunch.com if you want to grab a spot. I'm looking forward to seeing everybody there. We're going to have a blast starting Monday. It starts this Monday at 1 p.m. Eastern time. And it's going to be a lot of fun, but it's going to be intensive. So if you're down to be challenged, to be pushed, and you are serious about getting into apartments this year, let's rock and roll. We're looking forward to seeing you guys on there. So just $97 only on this presentation. Steven, here's just a case study for you guys, just to encourage you. Just minutes ago, I closed on a $5.7 million 51-unit apartment portfolio. He said, I expected great things when I joined 4 months ago, but I had no idea it was going to come so soon. So this guy in 4 months took what we're doing in apartment launch and closed a $5.7 million deal, raised $1.7 million. He literally told us, I have no time. I have 3 to 5 hours per week I can devote to this. And he literally straight up told us, I have no access to capital. No access to capital. I have no network, nothing. And he raised $1.7 million on his first raise and closed a deal. That may sound wild to you guys, but it's literally just who you're in the room with. It's literally just getting in the room, all right, and expanding your thinking. All right, so here's our promise to you guys. if you do exactly what we walk you through, I see people coming in excited for you. If you do exactly what we walk you through each of the 4 days, you will have made 3 quality offers, and you will be 100% confident you can get the funds, actually identify sources for funding the entirety of your deal, of your next deal, by leveraging other people's money, credit, and time. All right. And if you don't feel like you got 2x or more of the price, we will give you a 100% money back guarantee, no questions asked. All right. All you have to do is attend all 4 days of the challenge. All right. So we're literally giving you no obligation, no risk on your part. Just attend the 4 days of the challenge. And if you don't feel like you got at least 2x of the value of what you paid, we give you money back. All right. But most importantly, we want to partner with people. That is why we're doing this. We want to be able to expand and be able to help more people. And thus we all win. God created us to be in a community, to be partnering together. And Larry and I have experienced firsthand the power of teamwork and partnership. Helping people as a focus always returns. So look, guys, if you want to grab your spot, go to apartmentlaunch.com. Let's get rocking and rolling, guys. Let's get rocking and rolling. It's coming up this Monday, 1 p.m. Eastern. 1 p.m. Eastern. We're going to go till probably 2:30 every day. There's also a VIP opportunity. I don't know if that's still available. It's got a limit on it because it's only open to a few. It's a much more intimate, but either way, guys, we're walking you hand in hand. There will be nothing that is missing from this. You're going to be doing great. Okay. So go to apartmentlaunch.com. VIP definitely is worth it. If it's still available, I would grab your spot there. We'll be spending another 30 minutes to an hour every day with those guys. So DealFire. So I'm going to add a couple bonuses here. Bonus number 1, DealFire leads software, access to our proprietary software and community, access over 27 million off-market commercial properties across the nation, the industry's #1 software for finding off-market deals and actually getting them to the closing table. This is a 14-day trial. We're just going to give it to you for free. Okay. 14 days. All you need. You're going to be on the presentation with us. We're going to be walking you through how to pool the properties, how to do all that kind of stuff, how to use this software. Okay. So we're going to be using this and you can just jump in completely free. All right. So I'm going to add that as a bonus. Just go to apartmentlaunch.com, guys, if you haven't grabbed your spot already. If you have grabbed your spot, drop in the chat. I'm in. Looking forward to it. Looking forward to working with you guys. All right. Apartmentlaunch.com. And then bonus number 2, Capital Raise Accelerator Playbook. Not only are we going to teach you, this is crazy right here, guys. This right here, the whole team couldn't believe I was adding this in, because this is one of the most potent, one of the most just extensive capital raising trainings there is. I don't know of anything else that goes in as depth as this in capital raising for multifamily. All right. So not only are we going to teach you how to raise capital and fund deals within 30 days consistently, you're also going to get the playbooks and action steps with all of the pitch deck templates, capital raising scripts, the 1-page investment summary, that literally the 1-page investment summary that's made us tens of millions of dollars, and so much more that is from our mastermind member only day 5 capital raising accelerator. The same challenge that has allowed several members on the first time we rolled this out to raise over $2 million in capital, and one member over $3 million. All right, so here they are. Bonus number 1, DealFire leads software. That's easily $200 value right there that we typically charge. Bonus number 2, Capital Raise Accelerator Playbooks. We typically, just for that by itself, it's $2,500. But we're going to add a few more bonuses here. All right, bonus number 3, lifetime access to the training. So don't worry about missing anything or not remembering what to do, because you have lifetime access to all the trainings and recordings of the Apartment Launch Challenge with this bonus, okay? So go to apartmentlaunch.com if you're ready to grab your spot. Bonus number 1, and we got people coming in. Yeah, looking forward to working with you, Michael, Blaze, let's go. Excited to be working with you. Again, if you have questions, put it in the Q&A. We're about to answer it. Dealfire Lead Software, $200 value right there. Bonus number 2, Capital Raise Accelerator Playbooks, $2,500 by itself right there, guys. It's worth it. Just that alone is 25 times the value. All right. Bonus number 3, lifetime access to the trainings and recordings. All right. That's $2,000 just for that we typically charge just for that training. And then bonus number 4, we're adding in pre-event profits. Okay. Show up already winning with a roadmap of step-by-step process foundations before you even get started in the challenge. So right now, if you go in, if you've gotten access, you're going to get an email that says welcome, and it's going to immediately give you access to this right here, this school community, skool.com. The community is where we host the training, where we host the community, and we'll be live with you on Monday. But in the training right now, you will see this pre-event profits roadmap. So it's a jump start on your buy box, your lead flow, the 12 steps to buying off-market apartments, okay? So this is the fast pass. This is the fast track to buying apartments. This is on another level, guys. You've got to jump in here. Get into apartmentlaunch.com if you haven't already. Looking forward to working with those that have jumped in. All right. If you're having trouble with the link, just reach out to our team. Our team's on here. Mitchie can help you out. And then look, I'm going to sum it all up here. Apartment Launch bonuses. So look, the bonus number 1, Dealfire Lead Software, access to 27 million commercial real estate leads right here in one software. You're going to be able to pool the leads, $200 at least that we typically charge for that. Bonus number 2, Capital Raise Accelerator Playbooks. I'm not lying. I'm not joking, guys. This is $2,500 that we've charged people for just those playbooks. Bonus number 3, lifetime access to trainings and recordings, $2,000 for the trainings and recordings, okay, for life, for lifetime access. Bonus number 4, pre-events profits roadmap, all right? So you don't have to worry about missing any of the information or forgetting any of the information. You've got lifetime access to the trainings. Bonus number 4 is pre-event profits roadmap, all right? So that's $200 just there by itself. Go to apartmentlaunch.com, guys. So here's the full package right here. 4-day apartment buying challenge. $997 for just that. And then the day 1 finding off-market deals, just day 1 is $997. Day 2, expert scripts and negotiation. So we're actually walking you through how to position yourself in a way that attracts good deals and gets people to want to negotiate with you and want to actually give you the deal at a discount. So our goal is to make sure you're an expert on the scripts and negotiation. And again, if you want to outsource that, you want to get somebody to partner with you to do that part, you can do that as well. But day 3 is the big day where we're actually sending out offers, right? And again, the backing of our team is right there with you. We're walking you through how to assess and analyze these deals, how to underwrite these deals, know if it's a good deal or not. And then we are getting you to actually pump out offers, okay? So that's a really big day. You got to do that. Day 4, $100 million capital raise machine. Same process has allowed us and our partners all together to raise over $100 million in capital, $997 just the day 4 presentation, guys. It's going to be power packed. All right. Worksheets, checklists, and templates, $250 right there. Q&A with $1 billion leadership team, $750 right there. Bonus number 1, Dealfire Lead Software, $200 by itself. Bonus number 2, Capital Raise Accelerator Playbooks, $2,500, just that by itself. That is one of the most insane playbooks I've ever seen, and it's just, we spent a lot of time into that. Bonus number 3, because literally we're taking our systems, our business systems, and transferring them into yours so that you have something that has SOPs and is running like a machine. Okay, bonus number 3, lifetime access to the trainings and recordings. That's $2,000 right there. Bonus number 4, pre-event profits roadmap, $200. And then, so look, you add all that up, total value, $7,347. But obviously we're going to cancel that today only, $97, guys. $97 just today on this presentation. Apartmentlaunch.com. Go there, grab your spot. If you've already got your spot, go ahead and drop in there. Awesome. Looking forward to seeing you guys. Drop in the chat if you've already got your spot. If you need help with the link, Renee says needs help with the link. Let's get Renee some help. Marlene, looking forward to seeing you there. Let's rock and roll. Let's work looking forward to working with you. All right, so look, guys, you have 3 options. Option number 1, do nothing. Option number 2, and that doesn't allude to a lot, right? That's not going to help you a good bit. But option number 2, buy something else or consume more information. Look, I mean, we've spent this time together, guys. You've got to focus on taking decisive action. All right. One of our most successful students, one of the most successful people that's came through this same thing. He said, number 1 thing you've got to do. All right. I said, what would be your advice for someone who's just starting out in commercial real estate or multifamily? And said the same things you said. I don't have time. I don't have money. I don't have all these things. He said, number 1 thing is take decisive action. Be willing to take action and take it quickly, right? You've got to know your stuff. You've got to be able to get out there and take opportunities when you see it. And I promise you, it's not going to be from reading more books. And obviously the books were written years ago. You need to be taking what's happening in the market, looking at deals that are transacting today. Just like I said, we've got several deals that are, I'm going to show you in just a second, that are happening today. And you need to know, what are the interest rates? What are the things to expect from lenders? What are the things to understand that's going to help improve my game today so that I can actually have a shot at closing a deal, and then I will close a deal in the next 6-12 months, right? Option number 3, take our opportunity. Guys, let's rock and roll. Go to apartmentlaunch.com. Looking forward to working with you guys. So Blake Mull is a good friend of mine. He wanted to share with everybody, the education alone is worth the entire investment, much less the network and community. I mean, look, think about, what are you going to get if you make 1 friend, you make 1 connection? What's that worth, right? Here's Janelle. Deal closed, 48 units. He just closed this deal recently. I just made we just did a YouTube podcast with this guy, and he talked exactly how he bought this 48 units. He officially closed this 48 unit deal. This was in Michigan. Hired a VA. She starts the calls tomorrow. Houston Freeze bringing hot deals. 2 calls rolled back already. Win. I spoke to 2 sellers. Tim Crowder closed a 34 unit in South Carolina. God is so good. I'm going to share some more opportunities. Said God, I do want to read that part. God is so good. Thank you, REI team. Time to scale. Quick celebration tonight. Back to acquisitions mode tomorrow. That's a guy that has never done a deal before. He's never closed a big deal, never raised capital, but all of a sudden he's raising over $1 million. All right. So you can do it. If Tim can do it, if Janelle can do it, if all these guys can do it, you can do it. All right. Here's Linnea. She went from 0 to 88 units. I just talked about her. Here's a smaller deal. Like I said, we'll do any size deal if it's local to us, right? Here's a 9-unit deal. There's a 4-unit deal. Go into closing. 51 units right there. Here's Frank. Closed a 48-unit deal in North Carolina. First deal he's ever closed. All right. So, I mean, look, guys, you can do it. Don't let yourself off the hook, right? Don't let yourself off the hook. He said, first off, I want to thank our Lord and Savior Jesus Christ for making this possible. Secondly, I want to thank my wife for her tremendous support. Thirdly, I want to thank Jonathan and his team for the education and support. Lastly, to my investors who complete this deal, thank you, REI. And look, I want to share this too. Janelle said, hey, Jonathan, you have truly changed my life. Thanks again for everything. You have truly changed my life. Can't thank you enough. Here's the thing. I show you this not because of us or anything. You've got to take on the mindset of, I am called to change lives, right? Whether it's in the deal itself, and you're just making sure the deal changes your limited partners' lives, because look, limited partners are getting 20 to 25% returns on these deals, right? After a couple of years, right? So like you're changing people's lives. You're allowing people to retire. You're allowing people to spend more time with their family. If you have that mindset, not only in the deal, but just how can I be a part of communities where I'm helping people? This is what changed my life. It changed Larry's life, right? Being able to go out there and help people is what stimulates attraction of deals and capital and the ability to succeed yourself. Okay. So I just think we all need to learn from that and take on that mentality. I just joined REI Accelerator and already have several motivated seller apartment leads in the pipeline, including 2 just today. Before joining, I was on the slow single family route, but now I have the confidence and the network to take down 30+ unit apartment deals. If you are not in this group, you are slowing yourself down. Go to apartmentlaunch.com, guys. Here's the link. Here's the photo. If you want to screenshot this on your phone and then take that screenshot and hold your thumb on the picture, you can go to the link there. Or if you're watching this on a laptop, you can screenshot it from your phone, and it should take you to apartmentlaunch.com. So go ahead and do that. We're going to get into questions in just a second. So let's rock and roll, guys. Looking forward to seeing you in there. Here, I'll drop the price, or I'll drop the link right now. Apartment Launch. Apartmentlaunch.com. There it is. There's the link right there. Awesome. Good to see you guys jumping in. Let's go. Excited to be working with you guys. Starts Monday at 1 p.m. We'll see you guys on there. All right, let's get into some questions. Larry, you want to start answering some questions?
Sorry. Yes, be glad to. I was muted. We don't have many. You must have done a fantastic job.
All right. How and when do you pay off the investors if the plan is to keep the property long term?
You hopefully, if you are keeping it long term, you would hope to pay them off from refinance at some point as the property increases in value. You normally would model, in order to calculate the returns, you normally would model out selling the property in 3 to 7 years is sort of the standard. Now, if you get to that 7-year mark and the thing's putting off cash flow, you're going to have been communicating with your investors all that time and letting them know what the plans are for the property. So, you could have a discussion at that point and find out if somebody's wanting out. You probably could plug in new investors, or they may be fine with just staying in. But odds are you would have refinanced and gotten them a lot of their capital back, if not all. Or you could pay some of the investors back in full and keep some in if they were okay with that. So you have flexibility. Do LPs always receive equity in deals? No, they don't have to. A lot of syndicators have structured it so it's just a preferred return or just a fixed return. If I have a deal, will you participate as LP or loan sponsor? If I have a deal, would you buy it as a GP? If your main goal is to educate us, participate one way or another in deals we source, do you want to source deals in one LP investment? I think all of the above, right? Uh, to participate in a deal of somebody who's on this call, if you join Apartment Launch, you'll be in part of the community, school community, and you would be able to post those deals there, possibly. What would be recurring for us as a possible income to focus on this completely? I guess, Jonathan, can you answer that? They're asking, I guess, about replacing their income, which I think you went over maybe after this was asked.
Uh, yeah. So, yeah, you just, as far as replacing your income through apartments, I mean, first off, I would say focus on the acquisition fee to begin with. So then you can free up your cash flow to be able to uh, get the property up to where it needs to be quicker, right? That acquisition fee is a real thing that you should focus on. And that's there because you found the deal, you structured the deal, you got it to the closing table, and then you're going to execute on the value add plan. Pay yourself an acquisition fee, 3% of the purchase price. Whether that's $50,000, depending on, maybe it's a $2 million deal, $60,000, or $100,000, whatever that is. That's to pay you and your team for getting it this far, right? That's what I would say is focused primarily on. But you do need to look at the deal and say, how much is it cash flowing year one? But you got to think there's so many factors about apartments that are playing into this, right? The equity growth, the tax depreciation opportunities, and then the fees, right? A lot of these guys are playing fee games, like it's just a big fee opportunity. Like Grant Cardone, these big guys that are doing the large, class A properties and stuff, they're getting paid off fees. Like that's where they're making most of their money, right? Acquisition fee, asset management fee, all these different things, right? That's really where the money's coming from for them. So I would focus on, for these plays, acquisition fee. That'll free up your time, and then you'll be able to spend more time in it. But within a year, 2 years, you should be able to create, if you're doing a deal every 6 months, 20, 30, 40 units every 6 months, you should be, 20K plus, 30K plus in passive income in the next 2 years, and in cash flow, right? But again, I would just depend on that acquisition fee. That's really.
Yeah, for sure. And then once you get them stabilized, or maybe even out of the gate, depending on the permanent financing you put on it, you can count on 150 plus a month per unit. You can kind of do the math on that and what you need. But like Jonathan said, I mean, the four big things in real estate, the beautiful thing about it over like the stock market is you're not just getting appreciation in the stock market. And of course, the stock market pays dividends, but you also are paying taxes on those dividends, even if you don't take them, just for getting them, even if you reinvest them. So with real estate, you have depreciation, which is huge with the new Trump bill, because of the bonus depreciation. You get appreciation. The property is increasing in value, uh, over time. Rents are going up. So then you have cash flow, and then you have your debts being paid down. So you have, if you have amortizing debt on the property, the loan is being paid down. So all four of those things add to basically, increasing wealth or income. It's what I love about it so much. Somebody wants the IG handle of the person that raised 40 million. I don't know if we can
Yeah, I'd have to ask. I'll ask him
maybe
for
maybe,
permission.
maybe violate some privacy laws there or something. I don't
No, no, I'll ask him for permission and see if
Yeah,
he's good with me giving you out his name.
yeah. Well,
Uh,
this day and age, you can probably figure it out, right? But do you guys ever need a supplier that can import cabinets, countertops? Not right away, but always looking for better prices for
yeah,
sure. We'll
yeah,
we'll, we'll
yeah,
try to connect.
yeah. Well, look, guys,
So,
looking forward to working with you. We're gonna have a great time on Monday. So,
have
any other questions that you guys have right now? Put in the.
had one in the chat,
Okay.
that several 80-year-old owners that want to liquidate. How do you find them? Go to the pickleball courts.
Look, there's specifically 80-year-old owners that want to liquidate. Um, and what do you mean by that? Liquidate
Sell
their
their apartments.
assets, sell their properties. They want to sell their assets. Okay. Yeah, I mean, there's many ways to do it, right? But if you're specifically just older people, um, you may can it depends on your buy box. So you got to first identify what is your buy box, because you could go and look up on tax searches or on dealfire.ai or some type of property search, whatever you want to use, and find 100% equity in the search parameters. Like, hey, I want to find properties that have 100% equity. Like, I'm just assuming you're kind of talking about maybe smaller deals if they're wanting to liquidate, they're older, something like that. um and so you can go and look for properties like that and just call those people. That may land you something. But yeah, I don't know. Larry, did you have anything on that besides pickleball?
Yeah, no, I'm in the same way. I don't know how to identify the age of the owner that, but if you know specifically those properties, yeah, I don't know. I don't know a way to find the age. And we'll look at the, purchase date. Maybe if there's been a long, same owner for the last 10, 20 years, that may be a good criteria, but I don't know how to determine, find that.
Yeah. Well,
Other than hanging out at, maybe the apartment owners association or real estate investment groups, going to where they hang out and looking for the really old people.
yeah, yeah. I mean, there's a lot around that, right? We're gonna be diving into
Maybe,
how to find deals on Monday, but
maybe knock doors at the nursing home.
but look, we're gonna be going into finding deals on Monday, so we can talk more about that. But if you had more, you want to elaborate more on like what you're looking for, like what types of properties or something like that, we could talk about that. But yeah, somebody said network with senior networks. Yeah. Um, yeah. Cool. All right. Is there a monthly fee on property search AI? I'm guessing you're talking about dealfire.ai. We're giving you 14 days free. So 14 days are free. And then after 14 days, if you don't cancel, it's $97 a month. So if you want to keep it for whatever reason, you can. Honestly, you probably just need it for this 14 days and you'll be good. Like, because you'll be able to pull a good list of properties that will keep you busy for a month or 2 months. You know, um, are there any more monies for additional training due after that? No, it's just $97 apartment launch. $97 apartment launch. All right. What other questions do you guys have? All right. Well, look, guys, looking forward to it. If you've not jumped in, go ahead and grab your spot, apartmentlaunch.com. Look forward to seeing you guys there. Appreciate you guys joining. God bless. Have a wonderful day. God bless. All right.
Thank you. Look forward to seeing everyone.
Look forward to seeing you.